Hey guys, it's Crossroads here. Today we're going to talk about Palantir. As you may know, I am quite a Palantir bull. I've been in Palantir since shortly after the DPO. At one point, my portfolio was 90% Palantir. It's smaller now, but I've been adding to it very slowly at these levels. Love the company, love the stock, love what they have done, but not everybody loves Palantir. Recently, there was Citron, a firm that is a known and noted kind of notorious short seller that was shorting avidly back a few years ago, got blown up a number of times and ended up saying that they weren't going to short anymore. Well, they've changed their mind with Palantir. We're not going to talk too much about that report, but I will say, as far as their research report, which I say very loosely, the only thing they really get right about Palantir is that the stock is very, very expensive. They're absolutely right, 100%. And pretty much every point else that they make about Palantir beyond that just really shows that they don't understand the company at all. It's very dangerous to short something based on valuation alone, even when that valuation is stretched and quite extreme. So there used to be a lot of reasons to be short or be bearish on Palantir, but a lot of these have faded over time. It used to be that net interest income was the majority of the actual profit that Palantir made. That's no longer the case. It used to be that net dollar retention was very, very low. That's no longer the case. It's accelerated immensely. Used to be that government was very slow growth, and that's certainly not the case at all. In fact, Kathy Wood ended up getting out of Palantir because of slow U.S. government revenue. That's not an issue right now. They're growing fast and rapidly. Used to be that they hadn't really done much with the developer community, which really wasn't a good thing long term. They've done a lot more. There's always more that they can do, but they've really picked up on that. Their sell cycle was too long. That's been resolved with AIP and boot camps. Forward deployed engineers used to be a choke point. They've resolved all of these fully, or even more so than I expected they possibly could. But there are three issues with Palantir that I perceive as a bull. And so I want to showcase these so that we can better understand what we hold as investors in Palantir, or what you might want to look at before you jump into Palantir beyond just the valuation itself. Now, I have separate videos, and I'll link one below in the comments on just the killer quarter that they had and the reason why I'm buying more Palantir. Phenomenal company. It's hard to find something to be negative on, but there are three areas. So the first of these is in the missing word that is in their slide deck for their earnings. The last few quarters, or I think the last two for sure, they've not mentioned this word at all. And it is not a dirty word, but it's a word that you might have noticed that was on the slide decks previously. It's the word international, missing completely. Instead, the Palantir slide deck talks about U.S. commercial, U.S. government contracts, and of course, overall numbers. It's not something that they have to report in their slide deck, and they're certainly not highlighting it. Alex Karp has talked about Europe not really getting it, not understanding it, being anti-AI, and that they need to get on board. The rest of the world is growing at a slower rate. But in the 10Q filing itself, Palantir does break down the numbers for us. And so we can see this on geographical information. United States revenue is now up to a very, very large 73% of their overall revenue. It was 64%, as a reminder, last year. And I expect that this disparity right here will continue to accelerate. So we can see the numbers here. United Kingdom growth, this is actually respectable, and it's growing. Then that's good because they have a major hub in the UK. And of course, NHS was a massive, massive deal for them as well, although they did have that last year. So that's not really attributing to this amount of increase. But the rest of the world, look at this. Last year at this time, it was 100 and almost 64,000. We'll call it that. Now it's essentially 174,000 thousands rather. So this is 174 million dollars. And this is like 6% growth. 6% growth. You know what company put up 6% growth? And a lot of people say, including myself, that that's not enough, although they're accelerating it. Those are PayPal numbers. Those are PayPal numbers. And that is absolutely lousy when you want to be a global company. You want to reach most of the world. Now, there are some companies and some countries, rather, that they will not sell to just because they don't align with our Western values. But that's bad. That's actually really terrible. The United Kingdom is doing okay. So how big of a concern is this for Palantir? Well, I don't think it's a huge, huge concern, but it is something to be aware of and keep our eyeballs on. Simply because if you were a company and you are only able to absolutely dominate one market, if it's the US, you will be perfectly fine as a company, even if you don't reach your full potential and your full TAM. Now, beyond that, I think that there will be a point at some point when not just the United Kingdom, but they're growing okay, and I think that there's more growth to be had there. But really, the rest of the world really looks and sees and says, okay, we have no excuse but to get Palantir as a product. I think their product is so differentiated, and the ROI that a lot of companies are having, especially in the United States, is immense. We've talked about it elsewhere, so I'm not going to beat a dead horse here, but it is incredibly differentiated. And we're at the point in the cycle for the AI cycle that a lot of companies are beginning to realize that whatever AI projects they try to do internally aren't producing that ROI they expected. Some of them went after things like Microsoft. They're like, hey, Microsoft has this Microsoft Fabric. It's the latest and greatest thing. And it's okay, but it's not amazing. It has not given the ROI for most companies that they were expecting. And there's countless projects like that. And so as those continue to fail and fall, and as competitors sign on for Palantir and are seeing massive growth, and not even necessarily competitors, but are loud and vocal in earnings like we saw this last earnings quarter, continue to talk about this in AIPCon and other sort of events with Palantir, there's a lot of eyeballs on this. There's also a factor that Alex Karp and his team talked about during earnings, where as people are on major companies that are using Palantir, if they move off, and a lot of the times the turnover is pretty rapid. You know, it's 2 or 3 years. They move to another company that's not using Palantir. They're like, hey, guys, you need to use Palantir. And so there's somebody that's an internal advocate there. Or it even goes the other way around, that they weren't able to use it. Like, for instance, I tried to get us at Liberty University to use Palantir. I didn't get very far, guys, and I no longer work there. But sometimes when you leave a place, you go to a new place, and you couldn't get the business to use Palantir. You go to a new place and like, hey, this is a great tool. It's going to accelerate our growth. It's going to do all these tremendous things that we're wanting to do. And at that point, you become basically a Palantir salesman, even though you don't work for the company. There's a lot of examples of that, and I think that will continue to increase. But further out, I still think that there's going to be resistance, especially in Europe. There's a lot of skepticism towards American big tech and also AI in particular, and some geared towards, I think, unfairly Palantir, which neither here or there. That may last and persist for a while, but I think the direction that the United States is going is with Palantir especially. Alex Karp alluded to this and mentioned to this in the comments and earnings. He said that he expects that they could 10x U.S. commercial growth in the United States for Palantir in the next 5 years, which is amazing in terms of revenue. If that happens, it's not just great for Palantir as a business. Yes, I know it's expensive. We're not talking about the stock here. We're talking about the company. But if that happens, that doesn't just change the trajectory of Palantir and the companies that sign on with them. I think that actually begins to have an impact on the overall US GDP. And so when there are headlines, and I think you could call me crazy, but I know that people were calling me crazy back in 2022, the way I talked about Palantir. If we see headlines in 5, 6, 7 years that are like, hey, US GDP growth, what's behind this huge outpouring and outburst? And Palantir gets named time and time again, not as the only factor, but certainly a big factor. That's going to get a lot of countries, and as far as government revenue, and also companies that were very skeptical, that were very slow to adopt, that are being left behind, say, you know what? It's past time. And so this is an issue that I think for the most part resolves itself. I don't think they'll see growth like they're seeing in the US elsewhere in the world, not that rapidly, but I still think that they'll be able to reach a lot of this TAM. It will just take some time, but this is a factor to be aware of. Now, beyond this, there are 2 other issues with Palantir, not super bearish. In fact, I think this is the most severe one. So we'll do these a little bit more quickly, but one of these is stock-based compensation. Now, Palantir has always done a lot of stock-based compensation. It's a big part of their structure. And frankly, that's a big part of the way that most SaaS companies work as well in the United States. We do see a massive amount granted back in Q4. And if we look at visual stocks here, we see the actual share count. This is pretty great growth, but in the wrong direction. Stock-based compensation is going up not really rapidly in terms of actual revenue, but we see the actual float size is going up tremendously. Part of that is some RSUs that were granted just because of hardworking Palantirs hitting basically the goals, which was the share price goal. So it was a one-off, but still it's quite a lot. Now, if we do look at this in terms of a breakdown of SBC as a percent of revenue, You could argue, and I think you can argue quite fairly back in 2020, okay, way too much SBC, guys. Like, this is absolutely ridiculous. You should not have 293% SBC to your revenue. Now we're down to about 15% of their revenue actually is SBC or goes toward SBC. You do see that one-off bump with the RSUs, by the way. And so this is heading in the right direction as the SBC as a percent of revenue continues to decrease. I think that part of this also resolves itself a bit. Alex Karp did talk about trimming headcount actually over the next number of years, not because demand isn't there. No, he talks about the relentless demand, but just because Palantir products are that good. They're even able to emulate a lot of the functions of the forward deployed engineers using AIP technology itself. And so they are using their own technology to be able to scale their own employees on a better and better rate as well, which is one of the reasons why they have ridiculous operating leverage, ridiculous margins. They're absolutely killing it. But that does not change the fact that stock-based compensation is quite large. That float size that's authorized also is massive. There's been a number that's issued, and they continues to grow over time. Now, I think Palantir initially, when it became public, my guess is that they knew at some point that the company would grow to this point where the SBC as a percent of revenue continues to decrease, that they have a massive amount of cash, and they can use that cash to kind of do what a lot of big tech does, which is offset that stock-based compensation by buying back their own stock. There's a big problem with that, though, for Palantir. You know what that problem is? This stock itself, the company, is egregiously expensive. And so, yes, they've done some buybacks, but it is such a minuscule amount. It is not even worth talking about. They've authorized $1 billion worth of buybacks. They've used just a little bit of it. But I mean, look at the valuation. It's 518 price to earnings ratio. You don't have the price to sell is 103. You do not have the money. You do not have the revenue. Even if they use all $6 billion in cash, which we'll talk about in just a moment, to be able to buy back stock, even at the dip today, which it went down a good bit, or even if it falls to $100 a share, it doesn't make a meaningful difference. And so that is a bit of a problem, but it's not one that I really am too concerned about as long as Palantir is growing at, 40%, 35% year over year. I'm fine with it. The problem was back in 2023 when they're growing at 13% year over year and had this kind of stock-based compensation. That was a problem. That was an alarm, but they were able to accelerate and rectify. And as long as they execute well, I'm okay with it. But that is something to keep an eye on and be aware of. Now, the last of these, it doesn't sound like much of a problem, but it is a conundrum, probably more than a problem. And it's the sheer amount of cash, and they don't really have much debt, no long-term debt for Palantir that they have. Now, why would cash on the books be a problem for Palantir? Well, again, it's more of a conundrum. They have about $6 billion in cash. Actually, they do have $6 billion in cash and cash equivalents, including marketable securities. And that has accelerated quite a bit as well. So the issue is what to do with this. Now, a lot of companies would just say, okay, let's go ahead and buy back more shares. Yeah, Palantir can't really do that. It's just not effective. We already talked about that in the previous point. Now, other companies might say, well, let's do a merger and acquisition and just go ahead and accelerate our growth by buying out another company. $6 billion is not chump change. And of course, they could dilute some of their very expensive stock to buy some pretty incredible companies. That sounds great. But with what Palantir is actually focused on, since they're growing so rapidly in the United States, over 70% year over year in the U.S. segment itself, they should continue to focus and scale that as rapidly as possible, rather than trying to deal with a merger and acquisition. Not all companies do well with mergers and acquisitions as well. I don't know that Palantir is one, even as incredible as they are, that would handle a merger and acquisition well. And I can't really think of any product or company out there that Palantir needs to have that would really be a huge asset in their business. Yes, there are companies out there where they could say, okay, we're going to pivot this direction and just add this into the Palantir system. For instance, they could possibly buy out something like a Nebius, maybe not at the current valuation, but they could go after the cloud route. They could ramp up some sort of new start of their business. But whatever they have there is probably going to be slower growth than what Palantir is actually doing for their core product. It deviates from their mission, and there's an immense amount of TAM left, which they need to reach. So I don't think a merger and acquisition makes a lot of sense as well. Some have pitched the idea that maybe Palantir should, instead of holding this in cash. Maybe they can do $1 billion, $2 billion, $3 billion and put that in crypto, for instance, Bitcoin or Ethereum. That's okay, but I still don't think that's an ideal solution. And frankly, Karp doesn't seem the most enamored, although Peter Thiel is, with crypto itself. So it's a bit of a conundrum. It's okay to have a massive cash pile. A lot of companies do that as well, but you'd rather see this be deployed in a way that actually accelerates the business and brings shareholder value. So for now, this is fine. It's more of a conundrum than an actual problem. These are good problems to have, yet nevertheless, there it is. So if I was a short seller, which I'm not, and I certainly think it's foolish to short Palantir, especially for valuation alone, I think especially the international growth and the stock-based compensation as well are things to target for Palantir, areas of true weakness, especially the international side, to be aware of. For us shareholders, man, as long as they execute, these problems seem so small compared to what they've been able to achieve over the last couple of years. Anyway, there you have it. Those are the three biggest issues and biggest problems that I see with Palantir, the company, right now. And I don't think that these are insurmountable by any means. They've actually surpassed many others that were much more difficult problems. So I'm excited to see how this company iterates, how it grows, how it develops over the coming decade and longer. Happy Palantir shareholder and investor here. Let me know what you think in the comments, guys. Are there some bear cases that I am perhaps overlooking with Palantir? I would really appreciate truly if you posted that. I'm not going to look for an argument or anything, but there are some things that sometimes we can be focused on in one way and overlook in another. As always, thank you for watching, commenting, and subscribing. And until next time, happy investing.